going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I'm going to review a request Mr. Patel asked me a while ago, and I'm playing catch up with a lot of people. So I will do I'll try to do a review on a dividend stock I find attractive. These close-ended funds, I don't know. I mean, I'm iffy on them. I'll look at them, but I can't guarantee that I'm going to do a video on that. So there's a very cheap dividend stock that he mentioned to me, and I find it very attractive. I think I did a video on it, but I'm also going to add, probably the second half of this video, a real estate investment trust that is starting to do an arms race. And I'll explain to you this arms race in a certain niche when it comes to real estate. I think it's very attractive. A lot of REITs are starting to go after it. And I think these guys are doing a pretty good job. And if you're new to this YouTube channel, again, this is not financial advice. Got to hit that notification bell after you subscribe. Let's check these stocks out right now. And that dividend stock is FLIC, First of Long Island Corp, sitting at 1541, a dividend yield of 5.45%, a low PE ratio of 7.54. These guys are trying to keep up with the S&P, but they're not. So they're way down, which is somewhat attractive. Average volume, 93.41K. Market cap is $345.85 million US dollars. G range is $15 to $21.42, so that's way down. Day range is $15 to $16.08, and its previous close is $16.12. Now let's go to their portfolio and their overall, I wouldn't say portfolio, how about their overall review on these guys and where they're located? Obviously it says Long Island, but let's look into these guys. So here's their locations. Here's some of their drive-up locations in Long Island, New York. Here is just some of their 24-hour ATM banking. And then here's their safe deposit box services. So as a bank, if you're not making money, there's a problem. And obviously, Silicon Valley just had a big issue. And, they were pretty aggressive. Again, there could be problems, but these guys have stood pretty strong. So think about it. Anytime you swipe a credit card, you make money. Anytime somebody buys a car loan, they make money. So people are, putting money out for car loans. Not many people pay in cash for cars. So they're making money off of interest. They're making money off of business loans, personal loans, things like that. So like I said before, these guys are pretty, if you're a bank and you're bad, there's a problem. You close, you must really suck. I mean, I'm just being honest. There's so many ways to make money as a bank, as a broker, as a banker, as an investment advisor. It's just very straightforward. If you know what you're doing, you're going to make money. So as a bank stock or a financial sector stock, if you really suck, I don't know what to say. I mean, it's for these guys, this is like easy to make money. So that's one thing. A bank, they always make money. That's why I invest in Key Corp. That's why I invest in Huntington Bank shares. That's why I'm in Bank OZK. That's why I'm in FITB, fifth, with those stocks, Jackson Financial. I'm just like thinking at the top of my head of all these Ally. I'm with Ally. I mean, these guys are making money. They're hiking their dividends. So I'll go over their revenue and dividend history. Usually, if your revenue is going up, you're in pretty good shape. So this is in millions US dollars. 2015, 100. 2016, 114. 2017, 126. 2018, 140. 2019, 154. 2020, you can blame the pandemic at 145. And that's understandable with 2021 still being a little down because these guys are a small financial sector stocks. They're only in Long Island. So, I mean, you're not like Key Corp or Horizon, okay? I'm sorry, Huntington Bank shares. I don't know why I said Horizon, but Huntington Bank shares, you're very secluded. So that's one thing that can be a red flag. You know, when a pandemic hits or a recession hits, the smaller banks are the ones that take a big blow. You know, bigger banks are usually better off, but these guys can take a little bit of a hit. So I'll go to their dividend history. Now, for a cheap bank stock, this is very nice, very solid. So look at this dividend trends. Those 2017, 14 cents to 15 cents, and then it was 15 cents still in 2018. Then they hit 17 cents in 2018. And then 2019, they hit 18 cents. 2020, they hit 19 cents. 2021, they hit 20 cents. 2022, they hit 21 cents. So their dividend growth in 5 years is 6.75%. If you bought one share, you made 84 cents with a 5.45% dividend yield. Pretty good payout ratio according to Zacks, 41%. Now let's go to the dividend stock that I really want to discuss, because I see these guys winning an arms race, and I'm not giving financial advice. It's for entertainment purposes only. Disclaimer in the description. Let's check that stock out. That stock is Getty Realty Corp. GTY, average volume 356.09K. You know, they don't have PE ratios because PE ratios are really not that important with real estate investment trusts. Market cap is 1.73 billion. Year range is 2466 to 3649. Day range is 3420 to 3562. And its previous close was 3548. Now, what do these guys bring to the table if you're new to this channel? By the way, hit that notification bell after you subscribe. That's why I post videos for you. Let's check this out. Our portfolio, freestanding properties offering essential goods and services tied to convenience and automobility. So they have auto parts, they have 6 properties, auto service, 69 properties, convenience and gas, 696 properties, and car wash, 68 properties. So this is the one thing that's pretty good. So they have high traffic counts, signalized intersections, their real estate attributes, corner locations, 3,000 to 5,000 square foot buildings, high traffic counts, strong retail corridors, and alternate use potential. But this is what I like about these guys and the recent news. I see these guys doing very well with the arms race, and I see this as a gold mine right now for in like an arms race for a lot of real estate investment trusts. The car washes, the C-stores and car washes. The real estate investment trust invested roughly $157 million across 52 properties in 2022. So Getty Realty Corp wrapped up a busy 2022 and plans for an equity busy 2023. The REIT invested approximately $157 million across 52 properties and approximately $83 million across 36 properties in the fourth quarter. Additionally, as of December 31st, Getty had a committed investment pipeline of more than $100 million for development and acquisition of 28 convenience stores and car wash properties. The company expects to fund this investment activity over roughly the next 9 months. So, right here, according to Getty, it has fully executed agreements for each transaction. However, the timing and amount of each investment is ultimately dependent on its counterparties in the schedules under which they are able to complete development projects and certain business acquisitions for the company for sale leaseback financing. So just looking at this I see is a gold mine. And I'm also going to reference another real estate investment trust that's doing the same thing. So here's Jilly's Car Wash. This is just some information that I'm seeing. So the primary state is Wisconsin, but guess what? After the purchase, Orlando, Florida-based real estate investment trust National Retail Properties, NNN, purchased the 4 locations of $19 million according to state records. So you're starting to see this arms race happening. In Getty Realty, they're starting to adapt, because what happens when, you know, gas is not the main source of, cars. Although I do believe that hybrid cars are the best option, because what happens if you run out of electricity or you don't have power in your house, that could be a big problem. But I see the trends happening, and this is just very interesting the way these guys are starting to adapt to change, and people are just purchasing these car wash locations like crazy. Now I'm going to go over the revenue and dividend history of Getty Realty. The revenue wise, this is in millions US dollars. 2016 115, 2017 120, 2018 136, 2019 140, 2020 147, 2021 155, and then 2022 165. So there is an increase in revenue, which is very attractive. Now let's go to their dividend history. So for a high yield dividend stock, this is pretty attractive. So 2015, 14 cents to 22 cents, 24 cents, and they cracked 22 cents again. 2016, 25 cents, 2017, 28 cents, 32 cents, 2019, 35 cents, 2020, 37 cents, 2021, 39 cents, 2022, 41 cents, and then 2023, 43 cents. The payout ratio is 80%. Of course, 90% of what you make goes back to investors if you're a real estate investment trust. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 6.04%. So if you bought one share, you made 1.172 with a 4.98% dividend yield. So let me know what you think of this video. What do you think of the car wash arms race? I find this very interesting. This is why I wanted to add this to my review of my dividend stock. You guys take care and have a great Saturday.